Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey everybody.
Hey Lauren, I thought we would take a little different look at this upcoming end of the year tax planning. And we've had discussions about these potential tax provisions expiring in our past videos.
Yes.
You know, one of them we spent a lot of time talking about the changes in the investment tax rates with the capital gain tax.
Yes.
And we talked about the individual income tax rates kind of going up about 3% across the board for everybody.
Right.
So I found this article today that came out that was very interesting about the impact to our budget in revenue collected or tax revenue collected if they go ahead and let the tax law go back to the 2001 tax provisions, which is what it's set to do if no action is taken by Congress and the President.
Right.
And I thought for kind of an interesting, I'm not going to name every one of them, but I'm just going to talk about a few of them that are familiar to maybe our audience. And just to get your thoughts about it, you know, how much impact you think. I'm going to maybe ask you to make some predictions, because I know you're not the tax enforcer for our country, but it's just kind of interesting. So the first one I'm going to do is the deduction for K through 12 teachers, taking that $250 deduction on their tax return for education expenses that come out of their pocket. Do you think that's a huge impact to our budget, or not that big?
That's got to be small.
It is very small. That's the smallest one. Still, though, it's $462 million of potential tax revenue loss if they do not. If they do extend it, then that's $462 million of tax impact. Okay, here's a bigger one. The deduction for state sales tax. Washington state sales tax, other states that have sales tax. These are for states that do not have income taxes.
Right.
Do you think that would be a small one or a big one?
That's a good question. That's going to be somewhere in the middle.
Yeah. So you're doing great.
Right.
About 1.3 billion.
Okay.
In taxes. Okay. Here's a bigger one. The expensing of fixed assets, like for instance, for buying equipment.
Right.
If it's allowed to, right now you can expense up to $500,000 of equipment in 1 year for businesses.
Okay.
But if it goes back to 2001 law, it'll go only be maximum of $25,000 can be expensed in the first year. So it's a big difference.
Yeah, that is a big difference.
So do you think that's a large difference or a small difference in tax revenue? It's a little bit of a trick question.
I've been reading a lot that a lot of companies are buying a lot of equipment and not hiring people very much. Okay. So I'm going to say that that's a big one.
Okay. Actually, it's not that big.
Not big?
It's $2.3 billion, and the reason it's not that big, it took me a while to look at this. Like, gosh, that's a big difference. But if you think about it, depreciation is just a timing issue. They're going to write it off over time anyway. So really, it's the time value of the tax revenue. So that's why it's so much smaller. Now, let's go to some big ones. Now, this one is the extending the higher child tax credit of $1,000 per child tax credit, and also allowing it to be used against alternative minimum tax. Would that be a big one or a small one?
Oh, I really don't know.
It's a huge one.
It's a huge one.
$35 billion.
Oh, okay.
Yeah, and that's because that's just a pure dollar for dollar tax credit.
Right.
This is one that's close to our hearts, is extending that 15% capital gains tax rate versus going up to 20%. Do you think that makes a big difference or not so big difference?
Well, if investments do really well, that'll make a huge difference. I think under normal circumstances, that would be a very, very big one. Yeah. Under normal.
They estimated, again, that you're right. They're estimating it's about $10 billion. Okay.
Right.
I'm going to go with the grand one that nobody's even thinking about, and this is related to alternative minimum tax. And, and this is one that most people don't even think about, and they don't even really see it because it's kind of buried on the tax return. But this is one where people have an alternative way of having their income being calculated, and certain things like property taxes, state income taxes or sales taxes, things like that are disallowed. And so that whatever the higher tax is, potentially a person could pay alternative minimum tax. Right. What most people don't know is in the last 10 years we've had higher exemptions and higher thresholds before alternative minimum taxes applied.
All right.
So that's going to be, if nothing changes, that will go away and we'll go back to 2001 levels.
Oh, back to 2001 levels. Okay.
And what I was going to say is that I won't even ask this question, but that's going to make a $132 billion difference if that doesn't. So with all these little things to finish off this video, doesn't sound like a lot of taxes, But if you add them all up, all 36 provisions, it's almost $500 billion in tax revenue
per year.
Per year that is expected to change. So, this is my editorial coming across. I believe that based on, as of today, what the Federal Reserve is talking about in the banks with easing the monetary policy to stimulate the economy, I just feel like after the election's over, they're going to come up with a last-second compromise to extend at least some of these popular provisions. So, in your thoughts, take it away. This.
Yeah, there's no way of knowing, but I think
it's a prediction.
It's a prediction. I think that the ones that they will extend will be the ones that are the cheapest for them to extend.
Right. Okay. So, well, thank you for watching this episode of Erickson TV, and we'll see you next time. Bye now.
See you next time.